Hi, Sherman here. So today is the 29th of August, Monday, Singapore time, 6 p.m. There's currently quite a lot of good movement on the dollar pairs. So I thought I'd talk a little bit about the dollar. So today I'm going to talk about the wave count for gold. I think gold is getting pretty affected by the dollar movement. So let's just have a quick look at the current wave count for gold. Right, gold has been in a downtrend for quite some time. Um, the first original wave count started in December. So I gave the wave count as this, and we were supposed to look for the cells um since last year actually. Right. So but everything is going on right now. So great. So now you have this is the main big picture swing. So it's possible for gold to come all the way down to around this level, 1,005, all the way down here. Yeah, not out of the picture. In fact, or if you just put on, yeah, why not 270, 1,005, 1,005, 1,574, 155, 153, quite possible. Um, so this is the current big cycle wave count. It's just a very simple 1, 2, 3 move actually. So now what we're interested in is this move right here. This move right here. So we need to count to this. And the count right now, what I see is we're just gonna call it as this it's an ABC move. Okay, this is an ABC move. Something like this. Okay, let's go call it something like that. Perfect. So this is what we have. Most There is also an alternate count which is going to look like this. Hold on. The alternate count is going to look like this. Hold on. It's WX YXZ. Okay. I'm gonna put this one as here. So this is what we have. Tell you why in a minute it's important. Put them side by side. No, hold on. I want to put this as a different color. Let's put this as that. Put this as a minor. This. So you're looking for the downside. Why? Because of this way down. WX. This is a Y. This is X. This is a potential motive wave down, right? So these are motive waves of the same rank, right? Um, Now this break here is quite significant actually. This break here is pretty significant, which means that price can make its way down to this low, break this low, consolidate, and then continue down. Or this could even make something bigger as well. It's hard to say what this is going to be, which is why if you're trading this to the downside at this lows, you're going to take some profit off. All right. So this is the current count. It's ABC or WXYXZ. All right. So if we take this trade to the downside because of this breakout trade downside, it's not the best risk reward. I have to admit. All right. I did mention that this is actually a good way to to trade right here. It's actually ABC WXY ugly for one more down. So if you live through that, now you're here, which is pretty good. There was also one move. There was also some worry that of course this could actually come back up for one more high like that. So this B could have shifted over there. That was possible, but because this is also possible, a 1, 2, 3, 4, 5. Staying in the cells is the correct thing to do, right? So even if I'm not saying that this going, if I say this is going to go up, then people might want to buy. No, even if this goes up, you're still looking for this because it's still an A, a B. This will shift and then it will come down still. Right? But right now, this count is very possible. 1, 2, 3, 4, 5, or WXYXZ. That's why it's a good idea to actually I would say good idea. It's not the best risk reward right now because it's kind of close to this bottom. So here's a idea. What you can do is to look at your moving average. Right now, moving average just confuse people, and I know it can be quite tricky. So I'm going to tell you how you should actually look at moving averages. When you are getting something like that, you should forget about this moving average. You see, because it's very confusing. It goes up, it comes down, goes up, comes down, goes up, comes down. Then you thought it's going to go up again. So, but in this case, it didn't, So, which is why you need to know the count. Because if you know the count that this was a B and this was a C, you know that this must have been going down. So if you try to trade this, the person must know that they are in a counter trend. And when you trade against the count, which is down, things can go wrong, and you could get caught. Imagine this one came here and then you didn't know the count, you thought you could go up and buy again because there was a war going on in Ukraine, and then suddenly now you're trapped because it just kept going to the downside, right? So yeah, so right now what we are actually in this motive wave down. So this is also a third wave down, and therefore if this is going to be a fifth wave down, so these waves will have a bias to represent not represent to respect the this moving average. So therefore when this goes up, now you don't sell it here, you let it come back down again, and then it came here to break this low. So this is actually your first wave, right? So this is actually a third wave coming down. There is something right here in the middle here, but here we see when it goes back up as a third wave, see when it touches, it goes near this moving average, it comes back below, it goes down, goes up, but you don't pick this top, let it come back down again, then it continues down, right? So over here we went sideways, but you're always looking for the sell. See, when it goes up, it comes back down here, the sell comes back down. These are all the places you're interested in, then it dives. So now you are in this sideways again, which is this sideways, which means that based off the count, if you're interested in sells when it comes back to the moving average like this, all right? So when this one comes up here, yes, it's interesting, but then let's say you did not sell it here, or you did not sell it here. I think people know why. If you're familiar with time factor swings, you know why you could sell it here. Now, let's say you did not sell it here, or let's say now you want to add the trade here. It's one. If it comes back down, don't sell it here, because this breakout is a sell, but then you don't really have enough space to move, you see. Well, it's like 1:1, but what you can do to try to improve the risk reward is to allow price to do what? Yes, come back up again, but don't sell just because it's here, right? Let it go up, let it come back down again. Then when it's here, you can sell it down for a better timing, right? Rather than living through this drawdown, let it go back up, let it come back down. Then from here, you just come here, take some off. Because once it breaks this low, anything can happen. Maybe you're lucky, it just continues. It just continues down. Maybe it makes a bigger correction here, but you are safe. Then it drops like this, a bigger correction here. But if you entered here, you actually survive. You see, it will not have touched your entry. It came close but didn't touch. So, but whatever it is at this low, you do have to take some off. right? That's very important because people will be taking profit off at this level for sure. So that's goal basically. That's the goal wave count. Yeah, and as well as how to use moving averages to, try to get in on the trade. All right, thanks. And I'm going to stop this recording. Okay, 1 second.